All right, everybody, welcome. You're in the green room. We're talking about housing prices in Austin, Texas. Weighing in here is, no, I'm just kidding. We're jumping in. We're in the green room. We're going to talk about our guests. We have some awesome guests. As you know, I'm Ray Wang with DisrupTV. And of course, with my awesome producer, Elle, and our awesome co-founder, co-host, my best friend here, Vala Afshar. More importantly, we started this 5 years ago, so very, very cool. So we're going to do some quick intros, working our way backwards and talking about like where everyone's from, a little bit of what you're going to talk about on the show, very, very quick. And then, of course, we're going to go in reverse order, and then we're going to do some credits, and we're going to jump right into the show with some introductions and thanks to our sponsors. So, okay, let's start with Maëlle. Tell us where you're from and what you're going to be talking about today.
So I'm actually, this is a complicated question, actually more than you think. So I'm French, but I actually live in New York for the time being, and I've lived all around the world. And I published in September of last year a book called Trampled by Unicorns that became a Wall Street Journal bestseller, which is talking about empathy and technology and how to make the tech ecosystems more empathetic and more human-centric. And then it's just happened that I also became the CEO of Techstars 2 weeks ago.
Wow, awesome. Sure. Perfect. Congratulations. That worked out well. All right, Tasha.
Hey, I'm Tasha Keeney. I'm an analyst at ARK Invest. At ARK Invest, we focus entirely on disruptive innovation. And as part of that, I do a lot of research on autonomous driving, autonomous drones, and 3D printing. So sort of talking about what the future of those industries is today.
Very cool. And our guest from very, very far and very early, Glen, tell us a little bit where you're calling from and what you're going to talk about today.
Yeah, so calling from Melbourne, Australia. So obviously very, very far away. And from Yellowfin BI. So yeah, from my perspective, really enthusiastic about data and what data does for organizations and how people can use analytics to improve their performance ultimately.
All right, transcending time and space into the internet. We are here, and we're going to start the show. So, Vala, you do the honors. And right. We'll drop everyone out. Ready?
3, 2, 1. Hello and welcome. Thank you for joining us on DisrupTV. My name is Vala Afshar. I'm the Chief Digital Evangelist at Salesforce and your co-host for the next hour. We welcome you to follow us on Twitter at DisrupTV Show. Send Ray, myself, and our distinguished guests your questions live using hashtag DisrupTV, and we'll do our best to answer them live. It's my pleasure to introduce my co-host, Ray Wang. He's the CEO and founder of Constellation Research. He is the best-selling author of Disrupting Digital Business. And breaking news, his new book is coming out this year titled Everybody Wants to Rule the World. He's a regular television business and technology news contributor on Fox Business, Yahoo Finance, and Bloomberg. He's a global sought-after keynote speaker and one of the most influential futurists to follow on Twitter at RWANG0. Welcome, Ray Wang, to DisrupTV.
Hey, thanks a lot. I'm here with my awesome co-host, Vala Afshar. But being more than a digital evangelist for Salesforce, he is a thought leader, someone to follow. Even Katy Perry is following him now on Twitter. And of course, if you want inspirational quotes, inspirational ideas, check in on Vala Afshar. Also keynote speaker, also on business TV. And of course, you're seeing him a lot on keynotes with very, very top customers all around the world. But it's not our guests. It's not about us. It's really about our guests who matter here. And of course, we have a wonderful sponsor, Robots and Pencils, who's been sponsoring our show for quite a few episodes. So we want to thank them, but more importantly, welcome our first guest. So Vala, who do we have for our first guest today?
It is our pleasure to have Glen Rabie, the CEO and co-founder of Yellowfin, an analytics and business intelligence software company focused on helping businesses understand their data. Glen is passionate about data and improving business performance through analytics. Prior to co-founding Yellowfin, Glen worked for National Australia Bank in multiple roles, including senior business consultant, global manager. While working on global data warehouse projects at the bank, Glen saw firsthand the frustration that business people had working with complex data analytics tools. He decided there has to be a better way. That was the seed for Yellowfin. You can follow all the work that Yellowfin is doing on Twitter at YellowfinBI, YellowfinBI. Welcome, Glen, to DisrupTV.
Yeah, thank you. Great to be here.
Thank you for joining us early morning, Melbourne. I really appreciate it.
That's all right. It's a pleasure.
So it's wonderful having you. And, you know, if anything, one of the hottest topics this year has been the role of BI and analytics. We used to relegate some companies, not all, most of us used to relegate these to that report you read at the end of the week, you know, the one where you just kind of say, oh, okay, that's kind of cool. Here's what we did. And suddenly the pandemic hit and analytics and BI took center stage. People started the day with, you know, business analytics, and they started trying to figure out what the reports were, and they worked throughout the day with it, and it was no longer a retrospect. It was something that you began the day with, ended the day with, and of course was going on continuously. So we know the importance. We see that importance that's actually happening today. What's next in the world of BI and analytics?
Yeah, look, I think, to be honest, I think BI and analytics has been around for a long, long time. It's quite an interesting space, but fundamentally, what we still see today is very analyst-centric applications. And I think the next wave of analytics is going to be very much about the data consumer. So products that actually help business people consume data in the way they want to consume it. So, you know, technology today, products today are very, very analyst-centric. They're designed for people who love to work with data. And I love data myself, but ultimately they're about products that people who get it, who love it, who get passionate about it, and who want to do things with it. But I think to make it really all-pervasive and something that people use without even thinking, you're going to see new ways in which analytics is going to be embedded into workflows and business processes, but also new UI that allows business users to truly be able to do their own self-service. And I would say in a way that they don't even realize that they're actually doing it. You know, they'll be able to ask questions and interact with data almost passively is probably the right way to think about it.
That's a great point, right? One of our analysts, Doug Henschens, talks about this, right? It's about getting self-service analytics, getting the ability to do next best action in the front line, right? Not waiting for something else to happen. So that's something big.
Yeah, I think what you said in terms of integration or embedding analytics into workflow and helping companies mature from, you know, descriptive to diagnostic to predictive and ultimately prescriptive use of analytics, where they it's guided selling, guided marketing, guided customer service or commerce, super important. I saw a video where you talked about the importance of radical transparency and the willingness to get feedback from downstream. I think it was advice to CEOs that, you know, if you want to embrace and cultivate a culture of data-driven organization, you really have to first appreciate and exercise radical transparency. Because sometimes the data will tell you things that you don't want to see. And, you can't be defensive. You have to, let the data drive your decision. Can you talk a little bit about the importance of trust and radical transparency, especially since last year, where the entire world moved to a decentralized digital only? So it's hard to read the room. You're not there in person. We're all remote. So the importance of analytics is so much more, but really the underpinning in terms of having a good culture where, you're not shocked with the findings and you're willing to absorb, learn, relearn, and to change yourself if you have to, because the data tells you need to.
Yeah, look, it's a really fascinating topic. And I had a lot of conversations over the last year, specifically around using the metaphor of how various governments were responding to COVID. And this is not a dig at the US. This is actually a dig even in Australia, where we did phenomenally well and actually being able to have almost a COVID-free country. Overall, the reality is almost every politician, irrespective of their political agenda, ignored the data, including in Australia. Yep. Right, and I find that to me was like this classic wake-up call to go, my God, if we can sit here as a population and we've got access to all this data and we see those logarithmic charts and we have access to all that data, why is it that you've got people in power interpreting or ignoring it and doing their own things in a completely different way? And to me, COVID it sort of highlighted what businesses shouldn't be doing. That organizations should be looking at the data without fear or favor and making choices and decisions around that. And I think that takes, from a leadership perspective, takes incredible amount of maturity, emotional maturity, to be able to actually say, what is the data telling me? How do I look at it? What does it mean for me? But once you head down that path as a leader, and once you embrace analytics in a way that you manage your business, it allows you to have what I call a dispassionate conversation with your organization, right? So you're not walking in emotional, you're just simply saying, this is what the data tells me. Now, help me to understand why it tells me that. What has happened in the organization that drives these things? Because there's externalities that the data never tells you, right? So, why you lose a deal, or what's happening in a particular region, or the political outcomes here, etc. So that's what you're expecting from your managers and from your line people and from people that work for you. But data is the catalyst for the conversation. It's not the end of the conversation. It's the catalyst. It's the starting point. And I think people miss that point, right? That you use it, but you need to be dispassionate. You can't walk into a room and just kick someone in the head going, I saw the numbers. The question is, why the numbers? Like the numbers are just the starting point. And analytics is the starting point. And I think, if you're really going to embrace data in your organization, you have to think about it in those terms. And what that ultimately helps you to do is to create an organization where people become trustful of having those conversations. There are a lot of business cultures where people fear the open conversation, and that has to change for data to make sense and to help you drive your business properly.
Makes total sense.
One of the challenges and this is the problem with this data, is that you forget that part of the data is part of telling a story, right? And one of the things that you guys have been advocating for quite some time is this notion of trading that data, creating these stories, talking about what's happening, helping people not just take the dashboards or, get the analytics, but get the data storytelling. So talk a little bit about data storytelling, because I think it's pretty important, because you can have the data, but if there's no story, what the heck, right?
Well, it's precisely what I just sort of touched on then, is, if you can look at a dashboard every day of your life and it's not going to tell you what's happening in your business, right? You're going to get a sense of the trends, you're going to get a sense of the numbers, but what it's not going to do is tell you the underlying drivers of your business. And that's what data storytelling to me is about. It is the long form narrative. So when I started, many years ago as a data analyst, back in the day, fundamentally what I did was write long form analyses for the business. I would see the data and then I have to explain it. So I have to walk around to each department, business unit, and go, what happened here? Why did it happen? And I'd have to pull that together for the executive team. And that, I actually think that has been lost. On our
whole art, this whole art of actually telling the story is lost. It's like, here's your report. Oh, okay, great. What do I do with it?
And people just expect the data to tell you everything, but it doesn't, right? It never will. And so, for me, that again, when I think about helping organizations to be successful and thinking about how data really underpins that, it's having someone in the organization that can tell those data stories, that can actually bring all that together, interpret the data, add value to it, and bring that narrative together to say, and then ultimately, from an executive team, take it all the way through to the end. When you take that story to the board, you're then saying, well, this is what we're going to do about it, and driving those actions. For me, that's sort of like the ultimate closed loop, if you like, of that sort of strategic analysis as opposed to your day-to-day operational piece.
Glen, which line of business leader is at the forefront of championing, creating this culture of a data-driven culture? Is it the CIO? Is it the CFO, CMO? And has the persona changed since the pandemic? Is it the need for cost reduction, optimization in business? Has that led to a different line of business leader coming to you, asking for your company to help them transform? Who's at the forefront of driving change?
Yeah, look, in all honesty, at the forefront of driving change, I'd have to argue it has to be the CEO. It has to be. Yeah, but sure. Irrespective, I think, and especially when we're talking about transparency and actually and building a culture of data, if the CEO is happy to make gut decisions, everyone's going to be happy to doing gut decisions. But what I saw, certainly as a result of the pandemic, and particularly in retail, where a lot of organizations were going direct to consumer, where historically they weren't, that has actually massive shift. Yes. That has been really head of sales. Is the person all of a sudden goes, oh my God, who am I selling to? Who, and asking those questions and going, well, where are my customers? Where do we need to be? How do we need to drive our organization? I'm seeing that far more than I think, and it's been a shift away from marketing in a sense. Like marketing's
and that's the chief revenue officer or the person that owns commerce, because we had, commerce has grown 10 years in the last few months in terms of e-commerce, and we had a head of McKinsey practice for North America speak to 70% of buyers have changed brands since the start of the pandemic, and so almost rest in peace loyalty to brand. If you didn't show value or availability, people are switching, and numbers unheard of. In some regions, up to 90% have changed brands. So when you talk about the person responsible for revenue, it's commerce and the head of sales inclusive.
Yeah, look, I think in both ends, but I think these organizations were grappling with precisely those problems. They completely disrupted their organization in terms of their go-to-market. And all of a sudden, it's that kind of emperor in new clothes, right? You're just sitting there going, well, who am I actually selling to? How am I selling to them? Where are they? And how do I build brand loyalty? Because ultimately that becomes the question, right? Is precisely that is like, and I can't mention the brand, but a fascinating conversation where, we're talking to head of revenue and he was saying, marketing's actually marketing the wrong audience. We now know that we're selling to X, and that's who we should be building the brand with. They're super loyal, etc. But we continue to perceive, as an organization, we perceive this segment, but the reality is they're selling to this segment, and you've got to embrace that segment. But the organization wasn't. It was really really interesting conversation. They just fundamentally weren't ready to shift, right? But and I think again, when you're using data, you have to be able to let go. You just have to say, well, what's it telling me? Where do I need to be? And that's where I'm going to be, and not sit there and hope that somehow magically, a bit of fairy dust. Reality is going to warp and change, and will be a different.
It's amazing to hear you say that it's not using data just for process optimization. It's new business model innovation. It's new go-to-market strategy. It's reinvention and really staying adaptable to this incredible change in that we've experienced over the last year.
100%. I mean, I view Analyst as two streams. There's the operational stream, which you talk, essentially, which is how do I run my business day to day, and how do I optimize that and put that into people's business processes, and then there's that whole data to actually run strategy, and to be constantly thinking about who we sell to, why we sell to them, what works, what doesn't, and to be nimble and agile in that space.
Okay, well, while data and analytics is not a controversial subject, let's talk about startup scene in Melbourne versus Sydney. No, I was kidding. Tell us what the scene's like in Melbourne. What's going on? We know you have the better coffee. That usually is a productivity factor, and some great universities.
Is amazing in Melbourne.
Look, I like to say, and I am from Melbourne. I've been here for most of my working life. But if you take Sydney and you take away the harbour and you take away the views, you'll get to Melbourne, right? So it's there's this healthy tension, but I think we're actually really pretty similar in many ways. It's not really worth the argument. But I think right now, I mean, what's interesting about Australia as opposed to most countries on the planet is that there really are only two cities that business exists in, right? And sorry to Perth and everyone else, but it's
Canberra thinks they're in the business.
But it's really quite fascinating because only 80% of our of commerce is done in two cities, and it makes it really different compared to a country like the United States. It's a quite interesting dynamic, but yeah, it's good.
But how's the startup scene? Like, are the VCs there? Are you good early stage? Look, we're going to have like Maëlle Gavet later. She's like the Techstars CEO. She's later on the show. She's going to talk about a little bit about startups as well, right? Tasha's following the disruptive startups that are out there. Like, what's it like? Like, is it good? Are you seeing more interest? So
there's been a lot of activity in the startup space, specifically around in the sort of financial area. So that's probably one of the areas I think we excel in Australia. So, but historically the sort of capital markets and the VC and all that was certainly lagging behind the rest of the states, and that is slowly catching up. Which is great. So you have the ability now to actually fund a business and get it to market. And the biggest issue you have in Australia always is how do you leave Australia? Like that's the first thing. You become an international company very quickly because it's a country of 30 million. You've got to sell somewhere else, and so that's
Why would
always
you
the
leave
challenge.
Australia? No, I'm just kidding. It's a beautiful country. So.
It's lovely. Yeah.
My final question to you: advice to CEOs or businesses in general in terms of how they can accelerate the adoption of AI and ML and some of the advanced capabilities that help it not just visualization, but really data maturity, so that you can make decisions in real time and create value at the speed of need. What do they need to do to accelerate adoption of these new emerging and exciting technologies?
Oh, yeah. Don't leave it in the hands of the technologists. It's probably the real question, right? I shouldn't say that. No, buy our stuff. No. The reality is, you do want to have people. You want to have and identify a real use case. Like get down. Like you're running a business, folks. You're not running a technology kindergarten. And you want to be finding something that's going to make a difference to your business that you perceive is going to add value. And don't trial it, but go all in is probably my answer. Like I think too many, and again, this is part of the problem of technology overall, is the whole idea of the MVP. The MVP is minimal, right? It says minimal. It's minimal for a reason, and the outcomes will be minimal. So what you need to do is actually identify something where there's going to be true value to your business, and then put the effort behind it and go really hard and deliver on it, and don't let it just die a slow death somewhere in a corner. That's what I would do. But there is so much opportunity with analytics now to optimize what people do. That's the exciting piece ultimately.
Sage advice.
Yeah.
Sage advice, wise words. You heard it here first. We're running a tech business, not a technology kindergarten for all the startups and startups that are out there. You're here with Glen Rabie, CEO of Yellowfin. Check out his company's Twitter handle at YellowfinBI. And more importantly, catch him later on replays here. And thank you so much for being on the show and waking up early in the morning. We're watching the sunrise in Melbourne for us. So.
That was awesome. Yeah, we did see that.
Very cool. All right. And we're off to our next guest. And thank you so much. We're sponsored by Robots and Pencils. If you can check them out, if you're doing design and anything else very, very innovative, give them a holler. And more importantly, we got our next guest, the one and only. Who do we have?
The one and only, one of our favorite guests, Tasha Keeney, analyst at ARK Investment Management. Tasha joined ARK in 2014 as an analyst for ARK's autonomous technology and robotic strategy. Tasha covers autonomous cars, drones, additive manufacturing, infrastructure development, and innovative materials. Tasha frequently appears on CNBC, CNN, Bloomberg, Fox Business. Ray, giving you a run for your money with all these incredible appearances. Tasha's been quoted.
I just try not to follow her.
Yeah, right. Yeah, tough act to follow for sure. Her research has been featured in Wall Street Journal, Forbes, Wired, Verge, Bloomberg, CNN Money, Market Watch, and many other publications. You can follow Tasha's incredible work on Twitter at Tasha ARK, TASHAARK. Welcome back, Tasha, to DisrupTV.
Glad to be back. Thanks for having me.
Thank you.
Thanks for being here. Oh my God, you guys are, so those who don't know, ARK Invest is one of the most innovative firms, thematic investing, thinking of disruption, and Kathy is back. So congratulations over there. But more importantly, let's talk about Tesla. That's one of the areas that you cover. And I think we're wrong when we say covered in the autonomous EV space, because it is much more than that. So how far is Tesla ahead of the competitors in EV and all the other sectors you think they're about to enter?
Yeah, that's a great question. As we look at what's happened over the past year, I feel like one of the big changes, we saw Tesla get added to the S&P. It sort of proved that it's a reputable and profitable company, and sort of, calmed some of the concerns over like the long-term earnings prospects. But also I think that, we saw a lot of positive analyst notes coming out that are sort of recognizing this opportunity that we've really been talking about for years at ARK Invest, which is that Tesla is the clear leader in electric vehicles. Last time I was on your show, I think I said they're 3 years ahead. We actually still think they're 3, if not even 4 years ahead of the competition. They just had battery day this year, and they announced a new chemistry. They're increasing range by over 50%, reducing costs by 50%, reducing capital investment by nearly 70%. And this will happen, over the next 3 years, basically leading them to produce a car that could be a $25,000 car. So, our research at ARK Invest has been showing that battery costs are declining. They're following a cost curve that's much faster than any cost curve that exists in the gas-powered car industry because it's more mature. And basically, Wright's law, which is what we use to model this, tells us that EVs are becoming cheaper and reaching this demand inflection point. So I feel like people are recognizing that Tesla is a leader in the market, but I still think that our sort of viewpoint in terms of exactly how far ahead they are, it may not be fully recognized.
Well, it may not be fully recognized, but you've been right all along. And for years, you've been talking about Tesla as a leader. Last time you were on the show, a year ago, there was a forecast that and a statement that Tesla was going to be the first $1 trillion market cap company. We had a 2024 forecast with a range of 1,500 to 15,000 bear bull range in terms of stock. What are your thoughts about where they are today? I think they're maybe the 6th most valuable company in the world at an 800 billion plus market cap. What are the views? Has the forecast been accelerated? And what are the thoughts given the innovation that Tesla has demonstrated since the last time you were on our show a year ago?
And Elon's no pauper either, so.
Yeah, well, we have updated our price target. We haven't been able to publish it yet. So you should look out for that from us. And then I'd be happy to share those numbers. I'd say, to talk about what's changed since then. So, our old expected value for 2024, if you adjust for the split, was about $1,400 per share. When we had done our analysis, we had looked at a lot of different scenarios. One of them was Tesla going bankrupt. So compared to our old valuation, I think a lot of those lower end scenarios are a little bit less likely. In terms of what we've changed in our analysis, well, my most recent research on Tesla is looking at this opportunity that they have to launch a ride-hailing service with human drivers ahead of solving for full autonomy. So basically, this is we had assigned a 30% probability that Tesla would successfully create a fully autonomous car because it's unproven. I do think, they're in the lead. They have a huge data collection advantage or data advantage in general because they're the only automaker using their customer fleet to gather information to train their autonomous system. But yeah, it's not certain. So, ride hailing offers them this opportunity to actually sort of de-risk that a little bit because it gives them a recurring revenue stream that we think could have much higher margins than the core auto business. They have a lot of competitive advantages to, say, Uber and Lyft because they can vertically integrate through insurance. It's actually cheaper per mile to drive a Tesla. So that means maybe they could take a higher cut or pay their drivers better. So there's a lot of reasons that they could do this. And, we think it could add $30 billion in operating earnings to the company by 2025. So it's a pretty significant opportunity.
And will we see this first in countries like Norway, or these capabilities are going to be piloted in the US? Because there's certainly countries that are much further ahead in terms of adoption of EVs and some of these capabilities that we're talking about.
That's a good question. I could see, just given where their install base is, yeah, you could picture them. I'd say they would launch in key ride-hail cities. So, places like definitely in California, maybe LA, San Francisco, one of the cities where they have a lot of cars, and that it's going to be like a good ride-hail market and a good market opportunity there. And then, eventually when they do solve for fully autonomous driving, they basically have the network set up. They've already laid the operational foundation for it. And in fact, maybe they can even, the ride-hail service could actually help them get to that autonomous driving problem sooner because they're collecting the exact miles that you would be driving in an autonomous ride-hail service.
You mentioned something really interesting and adding to the ride-hail thing, cities with dense Tesla penetration also makes sense, right? But the other thing is they've been talking about insurance, like Elon's looking for actuaries. So they're about to launch their own insurance for people with Tesla, right? There are other things about electrification. Talk about that, right? Where, every Tesla becomes a consumer and a producer. So, and the solar market that's going with that as well.
That's a great point. So, I think that could be one of the building blocks that they'd want to put in place to launch the ride-hail service as well. So you could see them launching it in areas where insurance is available. Maybe after California, it's Nevada. But yeah, I mean, Tesla has this opportunity to actually see what's happening in its cars on a more granular level than any insurance company out there. So they have this innate advantage to actually, sort of price correctly their policy. And if they eventually become an underwriter, you could picture them having a much higher margin than insurance companies collect today because of that data advantage.
You know what? It might show up that faster drivers actually get into less accidents, and I'll be okay. No, I was kidding. I'll get a lower premium. So.
That's funny. What are your thoughts about Tesla, Elon moving to Texas? Does that impact your formula in terms of projections and the future value and innovation velocity from Tesla?
We haven't explicitly factored in a specific move yet. And I know, there's been some back and forth. Elon himself relocated, but, there's a question of sort of the company. I think that, perhaps Tesla does do it for tax reasons. I think they'd probably keep offices in California, maybe to keep talent. But, I think that is sort of still to be seen. But, like the real driver of all of our models is that cost advantage in batteries and the modeling that we've done there. It's the advantage that they have in autonomous driving, where they really their approach is so that they could launch on a national scale versus a company like Google's Waymo, for instance. The way that they're testing autonomous driving and launching these pilots, it's a really painstaking process where you have to map in such high detail every city that you want to launch in. So it's a much slower rollout strategy. So if Tesla's successful in this, you can picture them getting a pretty large swath of the market relatively quickly, even if they're the second to launch, which they are at this point since Waymo is commercialized.
It's a great point. Tesla's been really good at having customers fund their innovation all along the way, whether it's the battery technology or supercharging network or what's actually happening with autonomous vehicle driving and the data collection that's coming from the cars. I mean, you pay for the feature having X, and then, suddenly they're getting automated data collection versus Waymo. They've got to pay drivers to go out and collect the data. So that's a huge advantage, as you're talking about. And those types of scale is pretty hard to beat, along with the fact that they put $1 billion into that Austin plant. I mean, when they light up that in Berlin, those gigafactories are going to be pretty crazy. So definitely some great stuff there. Hey, I was talking about adjacent markets earlier, but let me talk about other types of adjacent markets, from Boring Company to lithium battery sales. Like, where do you see those going for Tesla as well?
Yeah, I've actually done some work on the Boring Company as well. And
oh, cool.
Yeah, and it's an interesting idea because it might sound a little crazy when you first hear about this idea to dig tunnels, but if you look at how we think the autonomous driving market is going to evolve, it's going to. So my forecast is that at scale, an autonomous taxi could price profitably to the consumer at 25 cents per mile. So that's a tenth of the cost of ride-hail today or taxis today. It's less than half the cost of driving your personal car. So basically, what this is going to do is bring a lot of people into the ride-hail market that might not necessarily be there today. And, then there could be a potential convenience bump in that, I use the service more than I would have otherwise because it's so cheap and so convenient. But if you take that into account, we think that traffic is going to increase pretty dramatically. So Boring Company offers, a solution to circumvent that. And, Elon has designed this so that it's more cost effective than the solutions that exist today to dig tunnels.
Yeah, I know, it's crazy. You can actually lay out roads for cheaper than the $1 billion a mile sometimes that you're seeing. And the fact that you can do traffic management from those vehicles to actually optimize, flow, right? And those two factors are pretty wild. So
it is, it really is. For our audience, ARK Invest has a special thematic approach to investing. Can you share with our audience how that works?
Yeah, and the ETF. So.
Sure. Yes. So ARK, we are entirely focused on disruptive innovation. All of the analysts are focused. We're a thematic investor. So all of the analysts are organized by theme and technology. So I cover autonomous technology and 3D printing. My partner analyst covers energy storage, space exploration, robotics. So we're all cross-sector, cross-industry. We publish all of our research online, which isn't typical, for free, which isn't typical of an investment firm like ours. It's really something that our CEO, Kathy, from the get-go wanted to do. And we have what we call an open research ecosystem, which is that, publishing online, using Twitter, talking with others, putting our ideas out there to invite a discussion. Often we get a lot of critiques, we get a lot of fans, we sort of get a mix of both, but it's a good way to meet other people that are in the space, that might be in the industry. I meet startups this way and talk with CEOs and sort of really just evolve the research and sort of help us ultimately get to the truth and, see where the world is going in the next 5 years.
Awesome.
And we have a number of ETF strategies.
Super rich content. The algorithms are there. The logic is there. The pros, cons. It's and there's no other analyst that I know that has that level of radical transparency in terms of, not gating their assets and just welcoming feedback. So kudos to your approach. It's great. Definitely all of us benefit from it.
Yeah, no, it's wonderful. And I think part of that thematic investing that's out there, I mean, you guys have some things on the horizon. Talk about other things that are beyond the EV market, given that we know you best for that, but we know you've got other areas that you do look at. So.
Yeah, well, 3D printing is another area that I cover that is pretty exciting right now. So I think it's a space that's really been overlooked. There was a consumer hype in the 3D printing world in the 2015, 2014 time period, where there's this idea that there'd be a 3D printer in everyone's house. That never materialized, and it never will. But 3D printing is really important and could be a really key tool for things like healthcare and aerospace, where you have these really complex, low volume parts. Basically, with 3D printing, complexity is free. You can print something cost effectively that's very, in a shape that you could have never created before, basically. So during the pandemic, a lot of the healthcare supplies were 3D printed, the replacement parts for ventilators, even some of the nasal swabs, because you can get 3D printing up and running faster than you could a traditional manufacturing process. So instead of waiting for those tools and those lines to be set up, you 3D print it on the spot in hours, and you have your solution in days or less. I think after the pandemic, it's going to become even more important as companies reconsider their supply chains, because 3D printing can localize manufacturing. It can help you cut costs, and when you're sort of pushed to do so because of the pandemic, and maybe you're looking where to save, you're going to look to a new technology like 3D printing to help you get that advantage.
That's amazing. Tasha, our next guest is CEO of Techstars. They've invested in or continue to invest in over 2,000 companies, and they maintain a portfolio of, I think, over $185 billion in terms of companies that they've invested in. How does a startup founder, entrepreneur engage with ARK Invest? What do you look for, and how do they, contact you in a meaningful way where you stay engaged and learn more about what they're doing in their particular space?
Well, we meet a lot of people through Twitter and sort of anyone that responds to our research through our website, LinkedIn. I mean, there's so many ways that you can get in contact with us. So, always happy to just field those incoming requests and get new guests on our podcast and talk about autonomous cars and all the areas that we research. So, please reach out.
Terrific.
No, that's wonderful. So let's take a step back and talk about just in general, like the industry that's going on in financial services and what you guys are covering. I mean, the way you guys entered the market is completely that was disruptive as well. What Kathy started, your founder. So talk a little bit about her and how she got started and how you got attracted to working with her.
Yeah, so Kathy, founded ARK to focus entirely on disruptive innovation and really create that open research ecosystem that I described earlier. So a lot of firms don't even allow their analysts to use Twitter, and she thought that that sort of open source approach was really the way to go. It's really the way to find the ultimate truth, and maybe even occasionally realize where you might have made a mistake in your analysis when you're looking at a market or a technology. She founded the firm in 2014. Since then we've had amazing growth. Our total assets are over 70 billion now. We cover fintech. We cover what we call our next generation internet strategy, which is things like AI and the future of gaming and all that. We have a genomic strategy, and then of course where I focus. So we have actively managed ETFs and mutual funds and separately managed accounts that are all around that. But we were one of the first what we would say sort of truly active ETF managers in bringing a product to market and sort of bringing that transparency In our trading, you can sign up for our daily trading emails and find out what the trades were that day in the ETFs as well. So, in addition to the research, we want to just be as transparent as possible to our investors.
That's great.
Okay. Hey, fun fact. Don Angie, why is that your favorite Italian restaurant? And where else would you go?
I love that restaurant. Well, New York has the best Italian food, so that's just one of the great spots. But I don't know. I also love pizza. Actually, I've been spending
Pizza Showdown. Where's your favorite? So.
Well, okay, so I've been spending some time in LA, and I tried Pizzana recently. It's another good pizza place. So I don't know if it certainly rivals New York pizza, which is pretty hard to do. So.
That's awesome.
Wow, Pizzana in Brentwood, one of my favorites.
I enjoyed thin crust. So it was in Italy where I had the best pizza. I prefer thin crust pizza. But my final question is, in terms of the pandemic and its impact in terms of accelerating drone technology, additive manufacturing in 3D. Again, we've had commerce experts say we've experienced a decade of accelerated adoption. What's your sense in terms of the last 12 months and the pandemic's impact in terms of driving innovation in the autonomous space with drones and, of course, 3D?
Yeah, so our CEO, Kathy, has always said innovation takes share during tumultuous times. And I feel like this past year is really the perfect example of that. As you said, we saw e-commerce as a share of retail increase at a rate that, we've never seen in such a short time period before. And a lot of that's likely not going back. And so as we look to the future, for instance, in e-commerce, we think that it could grow to roughly 60% of retail by 2030. And drones could actually deliver half of those volumes. So it's really only going to become, cheaper and more convenient as you get things like autonomous technology rolling out. Same thing with 3D printing. As I mentioned, it sort of is a great time for people to test the technology, understand how it works. Drones are used for a lot of contactless deliveries. So you got a lot of that experimentation, maybe that regulators or local regulators wouldn't have been as comfortable with before. But now they got the opportunity to do so.
60%, Ray. Wow. Imagine businesses that are not building their digital infrastructure. It's frightening to think that there's still companies that think things like e-commerce is a nice to have versus must have.
I'm so excited. This whole new disruptive world's out there. We'll be following you, Tasha, as you look at all the different things from electrification to Tesla to drones to 3D printing. You can follow Tasha Keeney, analyst at ARK Investment Management. Of course, you can follow her on Twitter, more importantly, at Tasha, ARK. Thank you so much again for being on the show, and I will see you at Pizzano's when I sneak out there to Brentwood.
Okay, can't wait.
Thanks, Tasha.
Thank you.
Thank you.
Wow, super fast, super great. And of course, we have an awesome sponsor, Robots and Pencils, but we also have better guests. So let's talk to our next guest. She is a legend in the making and in charge of something really big. So who do we have?
We're honored to have Maëlle Gavet, CEO of Techstars and author of a new book, Trampled by Unicorns. Maëlle has been a leading technology executive and entrepreneur for over 15 years. Started her first business at 16, went on to find two companies, served as investor and LP. Maëlle was recently, in fact, 10 days ago, named CEO of Techstars. Mission of Techstars to help entrepreneurs succeed. Techstars investments in more than 2,300 companies, including companies like Uber and Twilio, created a Techstars portfolio that is worth more than, Ray, check this out, $185 billion today.
That's a B, darn it.
Yeah, and Techstars itself now employs 300 people, 22 countries, active in more than 150 countries. Maëlle has been named Young Global Leader by the World Economic Forum, one of Fortune's 40 under 40, one of the most creative people in business by Fast Company, and 5th among Time Magazine's list of 25 female technopreneurs. Most recently, Maëlle was Chief Operating Officer at real estate platform Compass, a company valued over $6 billion. She has spoken regularly at leading technology industry events. Her writing has appeared in Wired, Harvard Business Review, World Economic Forum, Fast Company, Fortune, and many others. She's the author of Trampled by Unicorns, which we're going to talk about. Big tech's empathy problem, how to fix it. What an important topic to cover. You can follow her on Twitter at MaelleGavet. Welcome, Maëlle, to Disrupt TV.
Wow, that was quite an introduction. I think I feel like I'm almost the same color of my dress, but thank you.
I had to cut it short. We only have a 20-minute segment, and you've done a lot.
Thank you. I'm not that young anymore, actually.
Well, we have the best-selling author here, and more importantly, you've written a bomb-shelling book, This Trampled by Unicorns. There's some very interesting theses here, and given what's happened, I think there's a call for more empathetic tech. Let's start there. Like, what inspired you to write this book? Where do we begin? Like, why did this become an important topic for you? And then, more importantly, why? What was the thesis behind this, and why is it empathetic tech important? So let's start there.
Okay, so you asked why. I didn't wake up one morning saying, okay, I'm going to write a book. It just really came over time because I kept talking about the fact that we need to be more empathetic, we need to be more human focused. I've been, as you mentioned earlier, I've been working in tech for quite some time, and I really wanted to paint an exhaustive and balanced picture of the impact of big tech on humanity. What I call in the book, the good, the bad, and the ugly. Because I found that too often books and media articles were too one-sided. They were either describing technology as something like amazing, don't you dare ever questioning it, or the exact opposite, which was like, oh my God, tech is horrible, like we should throw everything away and just go back into our caves. I mean, I'm exaggerating a little, but you know what I'm talking about.
Yeah, so definitely.
I wanted to explain why, because of a deficit of empathy at the core of the tech ecosystem, we're finding ourselves at a crossroad where the negative is starting to outweigh the positive. And I wanted to say not everything is lost. And so that was the first goal. And then the second goal was to actually offer solutions, because I want things to get better, and I believe that each stakeholder in the tech ecosystem could actually do something, not just the big tech companies, so it starts with them, but also the investors, the media, the users, the government, etc., etc. And so that was really the two goals, like paint a balanced picture of tech and how we got where we are right now, this crossroad, and then half of the book is about solution. It's about what is it that we can actually do.
Yeah, I mean, in the book, you in terms of big tech's failure and where they come from, where they're sourced from, there's references to cultural insularity, hyper growth, self-sustaining ecosystems, lack of diversity. You penned an article right after you were announced as the CEO of Techstars talking about the importance of diversity. As part of the solution, what's the role of the CEO in terms of really championing the solutions we need in order to create a more empathetic world? The founder of my company speaks to values, create values, and business can be the greatest platform for change. And so can you talk a little bit about the solutions and the role of CEO, or perhaps advice to CEOs that are watching, what they need to do to really champion empathy?
It's interesting. It's the first time, as you can imagine, I've done quite a few conversations like that over the last 4 months. That's the first time someone is asking me very specifically what a CEO can do. So I'm going to start by saying what I always say to my teams, at any company I've ever worked at. I really do not believe in this idea of a one man, or in this particular occasion, a one woman show. I don't believe that companies are built by individuals. I believe that companies are built by teams. And while the CEO has absolutely a key role, and I'm going to be more practical and actually tell you what I believe are the things that CEO can do, I also think that we have to move away from this God syndrome, like this idea, especially I find in tech, with founders who are seen almost like God on earth. Like, we have to move away from this idea that the destiny of companies, the destiny of a company holds solely in the hand of a founder. And by the way, related to that, we have to move away, and I talk about that in the book, we have to move away from this idea that if we could only just get rid of and you name whatever favorite CEO you have. Like if you could just get rid of Mark, Travis, Adam, etc., or Jeff, like suddenly tech would be more empathetic. And the reality is, I actually don't think that would help that much. I think there's much more deeply ingrained questions around that. Having said that, I do think that CEO do have absolutely a role to play, and I think it started with themselves. I think a lot of CEO, I think, don't consider empathy as a strength. They consider it as a weakness, and some of them will tell you that openly, and they're very conscious of their opinion. But most of them will just not really think about it very consciously, but they would just associate empathy with sympathy or with pity, and fundamentally they will associate it with like bad decision or weak decision. Like the idea being like you can't take harsh decision if you're too empathetic. And I talked in the book about the fact that I am yet to find a tech company that is too empathetic. So I'm not saying that there's not work to be done, but like we're miles away from that. So the first thing is you have to decide as a CEO that being empathetic, and really what we're talking about, maybe we should have started with that, is what is empathy from a corporate perspective. And from a corporate perspective, being empathetic is really about thinking about developing the ability for a company to understand and integrate into its decision making the impact it has on people, not just its employee, not just its customer, not just its business partner, not just the local community, but like in general, all of us, we usually are in companies that have pretty large impact. And so empathy is just that. It's like understand and integrate the impact of the impact your decision have on other people. So this is strengths. Like if you're a leader who is able to do that, it means that you can see around the corners. It means that you will predict better people's reaction, that you can integrate them more into the decision making. And so it starts, again, sorry for the very long answer, but it starts with the CEO being really convinced that being empathetic is actually a skill. It's something that would actually make him a better leader. And so he can hire an executive coach to do that. He can make it a personal goal to hire and promote more empathetic people in his company or in her company, because he or she realizes that like this is really important. One of my favorite recommendation is like stop delegating empathy to other people. Like the number of CEO that I've seen saying, "Oh, my HR people are dealing with like the people problem." This to me, or my COO is dealing with the people problem, and so that to me is like delegating empathy. Stop doing that. Like take ownership. And then there's a bunch of stuff I could talk about this for about 3 hours.
Well, this is more of a statement from me than a question, but what I loved about the first article you penned, again, you were promoted to identified as CEO of Techstars 10 days ago. Yeah. And what I loved about your first article was, I found empathetic people are very purpose-driven. And in your first article, you wrote, access to capital and network continues to perpetuate a lack of diversity. And the Techstars model, unlike any other, allows us to take access far off the beaten path of traditional networks and hubs and deliver more impact at scale. And you specifically said, and while there is so much work to be done, I'm excited by our partnership with change makers like Harlem Capital, by our aggressive commitments to empowering 1,000 diverse CEOs, and the importance of the work with Techstar Foundation. So you talk about empathy as a superpower and a must-need in society today, but you specifically target goals and speak to how companies can think about driving a more purposeful, more meaningful engagement, and in terms of holistic success, not just your companies, but everyone that touches Techstars. And I thought that was brilliant. Sorry, that's just a statement. Ray, go ahead.
I do. Thank you. I'm just going to take the compliment. I'm not going to.
No, I think just like your book, giving example use cases of how we can fix these issues, or at least be mindful because so many of us have blind spots in terms of things that we can improve. You brilliantly identify specifics. Go ahead, Ray. Sorry.
I don't know about the brilliant, but I'm just going to say that I think that we first need to align on what the problem is, and I think in many cases we don't necessarily agree. And so, like, just like all aligning on the fact that we really need more diversity is an important thing, and aligning on the fact that this is good for business is important. Then we need to put numbers, because you can't manage what you don't measure. And I think it starts really with like making sure that there are numbers and targets. And then you need to be very concrete in the solutions that you're suggesting. And I think a lot of the conversation we've been having over the last, give or take, 3 to 4 years, basically following the Me Too movement in tech, you had like the big PR announcements. For some company, you had some numbers that were there, but they were not necessarily tracked systematically. For a lot of companies, they were not even tracked, or if they were tracked, they were not publicly tracked. And then the activities, the actions were very on the surface, very like, oh, we want change, but we don't want to change. That's really, to me, it really summarized. It's really being summarized. Besides that, oh yeah, we want more diversity, but we don't want to change anything about our criteria to recruit, the type of work that we're giving to people, how we assess people, how we promote people. Like, so we want change, but we don't want to change, and that's a bit of a problem.
For sure. I think you're on mute, Ray.
Yeah, right.
Sorry.
I think
I interviewed Dave Cohen 5 years ago, founder of Techstars, and the spirit of giving and generosity is there. Anyone who's gone through the accelerator program and the mentorship program just knows that the folks at Techstars just deeply care about your success. And in fact, the reputation is you go out of your way to ensure success. So it doesn't surprise me the number of investments and the success you've had with these incredible existing unicorns, and of course, successful public companies that we referenced at the beginning of the show.
I hope I will help continue the tradition. That was really, for me, what I thought was amazing about Techstars is this what we call the give first principle, which is really about like this idea that don't take, just give, and then you will see like things will happen. Techstars is very focused on founders and on helping them. It's about providing founders with mentorship, with access to talent, with access to an entrepreneurial network, to access to investors, et cetera, et cetera. So that I thought was just amazing. And then the other piece that I, especially on the back of the book I've just written, this idea that you could actually combine good return on investment, because Techstars is not a non-for-profit. Techstars is actually an investor. You could actually combine a very good return on investment and positive social impact. You could actually, you had to, even because of the model, you had to go and look for entrepreneurs who would normally not be helped by traditional VC. And so that's actually like so deeply ingrained into the Techstars model that to me, it was a revelation. It was like, oh my God, you can actually combine making money and doing good.
They're not mutually exclusive.
Oh, that's cute.
Ray, I can't hear you. I don't know if Maëlle can hear you.
I can't hear you.
All right. Can you hear me now?
Yes.
There we go. So what happens in the future? 3 to 5 years out, we go talking, we see what's next. Like, where do you see that? What happens? I mean,
we've only been in this role for 10 days.
She's a visionary. I know she's a visionary.
Look, at Techstars, I can't tell you, because right now I'm at the very beginning of what I call my 100-day listening tour, with the idea that I want to talk to every single employee, and I want to talk to as many of our customers as I can, which are the entrepreneurs. Like, I really believe that Techstars is the primary customer of Techstars is entrepreneur. We want them to be happy. We want them to be successful. And I'm not going to create a plan before I talk to as many as I can. Objectively. Now, in terms of
great point.
Tech, I think it's going to depend a lot on what's happening in the next few years, especially as governments are starting to realize that the consumer internet is a topic of national security. as governments start to realize that the consumer internet company have a direct impact internally, so on their citizens, but also externally in their relationship with other states. And so there's going to be a lot of conversation and a lot of decision in the next 3 to 5 years around government control, around fragmentation of the internet. I mean, China led the way many, many years ago with the Great Firewall. I think there is a very decent chance that we are going to see similar model in other countries. I mean, India has started doing something like that by kicking out Chinese companies. Europe and the US are actually having some conversations about some limitation, etc. But it doesn't have to be that way. And I think there are a lot of people who are very positively trying to keep like the fundamental value of the internet as it was created. And so to me, it's actually one of the best time ever to be in tech, because I think we're deciding right now what tech is going to look like in 3 to 5 years. And I mean, really like right now, like in this year, the next year. And then by doing that, we're also defining how humanity is going to look like, because tech is so ingrained now into our day-to-day life. So there's never been a better time to be a tech leader.
Amazing.
This is wonderful. We're here with Maëlle Gavet, our tech executive, entrepreneur, investor, and author of Trampled by Unicorns, and in her new role, 10 days in, the CEO of Techstars. So, très bien. Awesome. Congratulations. And more importantly, hope to see you again soon. So,
thank you. You are awesome. Thank you so much. Wow. Best-selling author, incredible CEO. Techstars, lucky to have her. And they're going to be even more successful than they already are. So, Ray, 3 extraordinary guests. For those in the audience, you know this is a favorite hour of the week for both of us. That was episode 220. We just concluded our 667th interview. Next week is episode 221. And what a lineup. We have Dorie Clark. Dorie is brilliant.
Dorie's back. Oh my God.
A Thinkers 50, a multiple best-selling author, advisor, strategic consulting, executive coach, keynote speaker. Dorie is one of my favorite people, and she's going to be on our show next week. Greg Johnson, CEO of Invoca, will be on our show, and we have 2 additional guests, new authors of a best-selling book. Chris O'Hara, Vice President of Product Marketing at Salesforce, and Marty Kahn, Senior Vice President of Strategy, Marketing Cloud, and they just wrote a new book on CDP, and we're going to learn about leading edge digital marketing with 2 of the best marketeers that I know. Ray, closing remarks.
I can't wait till you do the bio for Marty Kahn. It is the most awesome bio. You guys look it up if you're looking on Wikipedia. It is freaking awesome. And Dorie Clark was on episode 21 or 23. So it's awesome.
Almost 200 episodes ago. Yeah.
Almost 200 episodes ago, and she'll be back. So I'm super excited. I don't know what's going on around here, but there's a lot of movement. Look for what's happening out in tech. Catch one of our shows, Constellation Research TV, episode 4. It's popping up. You'll see the analyst on there. It airs Wednesday, 9 a.m. Pacific. And then more importantly, if you're interested in sponsoring Disrupt TV, let us know. We've got limited sponsorships and some strict criteria. But if you're interested in catching us, please join us. 50,000 average views, 150,000 views a month. And more importantly, it's all about you. So thanks a lot for being on the show. Vala, any last thoughts on your end?
Just thank you for giving us an opportunity to connect you with our guests and vice versa. Please stay in touch with us on Twitter and social. Please recommend guests. If there's someone you want to see, we have a very good batting average in terms of making an ask and having guests join. So I mean, we're several months booked in advance. So your recommendations may not be on the show until April, May, June. But please let us know. Use hashtag DisrupTV. Let us know who you want to see. And Ray and I will do our best to get them on the show. So thank you for watching.
Hey, thanks, everyone. Happy Friday. If it's Friday, it's 11 a.m. Pacific. It's Disrupt TV. Thanks a lot.
Cheers.